Hey everybody, this is Sime, your crypto CPA from the Lone Star State here at Akif CPA. Today we're going to go ahead and demystify FIFO, LIFO, and HIFO. These are terms that you see on your Coinbase settings in your tax account, in your accounting account. You'll see that in all the centralized exchanges. And now with the new 1099 DA forms, it is paramount that you understand what HIFO, FIFO, LIFO is because it will change your tax figures. And for a lot of us, it will be very, very difficult to change 1 year for one with one accounting method and then have another one for another year. It doesn't work like that. Unless you know how to keep your data static for the past years, you can't just nilly-willy change your accounting method from HIFO, FIFO, LIFO just like that. So per the IRS's rules and regulation, that have been laid out and all the notices that have come out, you know that there is no such thing as average based cost tracking. This is something that if people tell you, a lot of these third-party crypto tax softwares out there, they will have an option for you to pick one. Do not pick that. This is a big no-no in the eyes of the IRS, and this is something that can potentially cause you to pay massive amounts of penalties and fees. So let's get into it. I want to tell you what this HIFO, FIFO, LIFO is all about and how this will actually impact you and your tax figures from year to year. But you can't just change this. So you better be careful and pick the right one depending on the type of trader or type of investor you are in crypto. This will make a huge impact. So let's get right to it. All right. Here we go. So now imagine that I have purchased a crypto, and I just made this symbol up, by the way, and I wrote it over here. Random is made up. I purchased this crypto, and I purchased a quantity of each at all these date intervals, right? Starting from January 1st, 2022. Then in the middle of the year, I purchased another, and then the next year I purchased one more. So then there's a trend, right? Each year this is a hypothetical situation. I'm just purchasing half a year, I'm purchasing one. And this price has been going up, right? As we come down on the dates, you can see that this is going up. So what is FIFO? FIFO stands for first in, first out. Okay. And what is LIFO? LIFO is last in, first out. What is HIFO? HIFO is high in, first out. So what does this mean? First in, first out means whatever you purchased first, the very first crypto that you purchased, regardless of the price, is the one that you're going to sell. So imagine today is October 16th, 2025. It's very close to the Halloween time for a lot of us, if you are in the US for sure. And imagine that we sell quantity four of these random tokens, right? RMDM. So first in, first out means that you will wipe this one out first. Then you'll wipe the second one. Then you'll wipe the third one. Then you'll wipe the fourth one. So you're chronologically going into this side, right? Chronologically going down. First in, first out like this. So obviously for LIFO, this would be last in, first out. So whatever you purchased last. So imagine if we stopped at July 1st, 2025. If we're selling 4, we're going upwards. We're going backwards, right? And if you notice that, sure, the most recent price, let's just say that is close to the last one that we purchased, you're going close to the price of where the token is today. And this is a very simple example that I'm giving you. This is not something that most crypto will go up and down. They have a roller coaster, right? But it's so good for you to know chronologically what's happening in your head because you have that memorized. If you're a long-term holder, you have that memorized. Oh yeah, I purchased some Bitcoin or Ethereum then, and most recently. So if I pick LIFO, this is what's happening. So if the price has been high recently, you're selling the oldest ones first in, last in, first out. If you're doing it first in, first out, you're selling the most, probably if the price has gone up, you're selling the most cheaper ones. What happens In the US, we have something called the long-term capital gains rate. The short-term capital gains rate is your federal tax bracket. What does that mean? That means that here in the US, we are in this tier system, 10%, 12%, 22%, 24%, 30, and then 32, 35. So short-term capital gains rate is going to be wherever you are last on that federal tax bracket. That's where you're going to start paying your taxes. So that's why the IRS and the Department of Treasury, they want you to hold on to your crypto or hold on to your investments for at least a year or more. Why? It brings stability to the economy. Otherwise, you're going in and out, in and out, in and out. So a long-term capital gains rate is 0%, 15%, 20%, and in some cases for the NFTs that are deemed as collectible, it's 28%. But I'm not going to write that actually. So now imagine if we did, I'm going to go ahead and draw an arrow for the last in, first out, sorry, to be this. Remember, this is FIFO. F-I-F-O. This is LIFO. We're going backwards. This one we're going, and high in first out, I'm going to tell you later on, okay? So now imagine if we are doing a FIFO and we sold these four, certainly if we're selling them today, they are a year or more old. So you're going to only pay either 0%, 15%, 20%, depending on where you fall into that federal tax range. It's a income, because people that have less income, they don't have to pay long-term capital gains rate. But again, that threshold is very low, like I think very, very low. But then most people will fall into the 15% or 20%. But at least it's still less than your 32%, 35%, 37%. So even 24%, right? So what's happening is you want to be careful. You want to be careful in how you pick. If you're a long-term hodler, hodler is a term that has been coined up by the blockchain community. That means holding on to for dear life. That means you're just holding on to your crypto. You have just purchased it and you've forgotten about it. So if I were you, then I would want to sell the cheaper ones first. You'll get certainly a higher tax bill, but then not a tax bill. You will get a higher tax capital gains dollar amount, but then it will be multiplied by just these long-term capital gains rate, right? But if you are selling now, this is why it matters. So FIFO here will yield you this. Let me go ahead and color this as FIFO for a second, okay? And I would say this, okay? And LIFO will give you this. The opposite, right? We're going backwards. The last in, first out. And if today is October 16th, that means that excuse me, we have construction going on, but hopefully you can still hear me very well. So if today is October 16th, you will sell this one and this one at the short-term capital gains rate, which would be your federal tax bracket. So imagine if today what the price was, let's say 300, right? So 300 minus 225, 300 minus 200. The answer of that will be multiplied by wherever you last end up on your federal tax bracket, and then these two, which will fall into the long-term capital gain window, 300 minus 175, 300 minus 150, that amount will be multiplied by either 0%, 15%, or 20%, depending on where you fall in that federal tax. There's a threshold. You can look that up. Every year it changes. Depending on how much income you have made, your modified adjusted gross income, that will yield you 0%, 15%, or 20%. So here, even though you could have had a slightly higher tax dollar amount, two of these are broken into the long-term capital gains window. So there's a possibility it might give you a favorable tax due amount. But most of the time, the long-term capital gains rate, most of the time, assuming in hypothetical, it will yield you the best result. But again, it all depends on what kind of trader, what kind of investor you are. So, for example, if I'm somebody who's doing a lot of trades, then I would want to stick to the most recent market price. So then it will give me these small chunks of capital gain, right? Small chunks, because I'll be holding on to, for example, let's go to another window. So imagine in this window, I have done a small little chart. So if I am a trader and I have a quantity here, a quantity there, a quantity here, a quantity here, a quantity here, but then I'm constantly going in and out, then I would want to be close to the market price. Constantly be close to the market price, right? If I'm buying and selling, buying and selling, buying and selling, so then that will suit me best as a high frequency trader. But if I'm somebody who's a long-term investor, certainly just I'm not going to say in every situation, but in most situations, FIFO will give me the best result, even though I'll have a large dollar amount in terms of profit, but my tax rate will either be 0, 15, or 20. And that will give me a lower tax bill. And now the beauty of FIFO and LIFO is that you can chronologically in your mind, you can stick to you remember, a lot of us remember, okay, when we purchased this particular crypto at, or at what point in time, and what was the price. So we're following all that in our minds a lot of times, but obviously when the data is too much, we're not. So then this is something that I advise to a lot of folks, that if you are somebody that depending on what kind of trading activity you're doing, depending on the kind of trader you are, or investor you are, or just a buy and hold investor, or somebody who's going in and out more frequently, you need to analyze all those things, because you don't just want a lower tax bill today. You also want to empower yourself in making the future trades in such a way that will give you a lower tax bill. And a lot of us, we believe in a particular project or token or whatever that case might be. So we need to understand that if we're gonna hold on to these tokens, then we should also employ something. For another topic, you can see some of my videos on tax loss harvesting. It will reset your window. So now FIFO and LIFO will help you chronologically maintain where that price is and how this will impact your future trades. And in some cases, FIFO and LIFO are same. If you have a large period where you have not traded anything at all, imagine, let's say you have a 2-year gap window and everything now is in the long-term window, right? So then there you need to, then I would rather pick LIFO. Why? Because I would want to get out my expensive ones first, because everything is in the long-term window. But again, it depends. So you need to be very careful in what you pick as your accounting method in these centralized exchanges. You're not going to be able to nilly-willy change these. And then if you change it haphazardly in next year, and next thing you know, all your prior data is messed up, and then you're going to have this data mismatch, which will then cause a query from the IRS. And last thing you want to do is do all your accounting again and send them all your records. No. And now let's get to our next one, which is HIFO. So in this case, I changed the price. If you notice that the price fluctuated, it went up, and then it started coming down. So this is what the price did, price action, right? It over time, it went up and then it came down. So sure, a lot of people, if you're doing HIFO, you will end up selling these first, right? The most expensive ones, this, and this, right? Oh, sure. In this situation, it turned out to be the same. But again, it could be, let's say, some of the middle ones, right? But what will happen with HIFO is, sure, it will give you a lower tax bill for the current year, but you will lose that chronological ability in your mind to project. If you have a fancy software, sure, and you can spend lots of time, you can project that if you're holding on to Ethereum or Solana or Bitcoin of this quantity and you have it, you can go really fancy with these analytical charts and do this. But you want to keep things simplified too. But again, I understand people that are heavily involved, that are, they're just going in and out, and they want it this way. But at some point, you lose that chronological ability in your mind. But HIFO can certainly be fruitful for those that know what they're doing. But for those that don't know what they're doing, stick with one. Stick with one, and don't just think about you having a lower tax bill today. Think about the future. Think about what you can project. Think about what you can, how you want to place your future trades, because that will make you so much more powerful in crypto. And a lot of my clients, we spend a lot of time picking out the right inventory method because it changes the game for them. It truly does. So, ladies and gentlemen, this was a small little take on demystifying FIFO, LIFO, and HIFO, and how it's not just about the most expensive ones going out first. It's also about the long-term capital gains rate. Which one will give you that lower tax bill in a long-term position, not in just today you want a lower tax bill, and next thing you know, it's a huge, gigantic tax bill based on HIFO because you wiped out all of your highest tokens, and then now you're left with, and the price has been going up, and sure, you got a lower tax bill, but then the next year you have everything is short-term capital gains rate, and your now tax bill is even higher. So you want to be careful with this. You want to think about this a little bit, and this is something that you want to spend a little bit of time in getting this right, and make sure what suits you best, what kind of investor trader you are, and now you can get very fancy with wallet-based cost tracking, where you can pick one wallet with one method, one with another, so you can have a tax strategy that is quite unique, where you can store certain crypto that you want FIFO in one wallet, and then you want LIFO in another wallet, and you can then play with multiple subscriptions of different crypto tax softwares, and you can have it that will suit you the best. But again, you need a great crypto CPA for you to make this happen, and please find one locally in your area, in your state. I would say consult with few of them, not just one, and make sure that you're in it for the long run, and don't let anyone wing your crypto data. The IRS is now watching crypto tax returns like a hawk, and they know very well what's going on in blockchain, but they're now monitoring a lot of the blockchain transactions. Not all of them, obviously, but they're using AI analytical tools from Chainalysis, and they're just right on it because there's a lot of tax evasion going on. So be informed and have an amazing 2025. Make sure if there are any crypto tax amendments you need to do, get to the IRS before they get to you. So make this your last year where if you have data in the prior that you think you needed to fix, let's get this done. Get that monkey off your back so you can enjoy life. Take that stress away. Let's simplify crypto tax and accounting for you and have an amazing journey. Thank you so much. This is Saim, your crypto CPA from the Lone Star State here at Akif CPA. Like us, subscribe to our channel, and then you'll have front row seat to all the next streams out there, okay? Thank you so much.